Imagine this. You just sold an investment, maybe stocks, real estate, or cryptocurrency, and you made a nice profit. You're excited, right? But then reality hits. Taxes. The government wants a piece of your hard-earned money. Sometimes, a big piece. Capital gains tax can take a huge chunk out of your profits, leaving you wondering, is there any way to keep more of my money? Well, here's the truth. Yes, there is a way, and it's completely legal. That's right, you don't have to pay massive taxes on your capital gains. Not if you know the right strategies. And I'm not talking about shady loopholes or risky schemes. I'm talking about real IRS-approved methods that smart investors use to protect their wealth. So why aren't more people doing this? Because it sounds too good to be true. But I promise, it's not. All it takes is understanding the system, learning how to use tax laws in your favor, and planning your investments carefully. In today's video, I'm going to reveal exactly how you can pay zero taxes on capital gains. Legally, I'll break down key strategies like how your income bracket affects your tax rate, how to use special accounts like Roth IRAs, the power of your primary home, and other smart moves like tax loss, harvesting, and 1031 exchanges for real estate. Whether you're a beginner, investor, or someone who's been in the game for a while, this information can save you thousands, even tens of thousands, in taxes. Plus, these strategies aren't just for the ultra-rich. They're for anyone who wants to keep more of what they earn and grow their wealth faster. So if you want to learn how to legally keep more of your investment profits and avoid paying unnecessary taxes, you're in the right place. Grab a notebook, hit the like button, and subscribe, because by the end of this video, you'll know the exact steps to protect your money from capital gains taxes. Ready to get started? Let's dive in. Before we dive into how to pay zero taxes on capital gains, let's make sure we're all clear on what capital gains actually are. Simply put, a capital gain is the profit you make when you sell an asset for more than what you paid for it. For example, if you bought shares of a company at $1,000 and later sold them for $1,500, that extra $500 is your capital gain. This applies to many types of investments: stocks, bonds, real estate properties, crypto, and even collectibles like art or antiques. But here's the thing, when you earn money from these profits, governments typically want to tax you on the gain. That's called a capital gains tax. Taxes on capital gains can vary depending on your country, how long you held the asset, and your income level. For example, in many countries, including the US, there are two main types of capital gains taxes. Short-term capital gains tax. This applies if you sell an asset you've held for less than a year. Short-term gains are usually taxed at your regular income tax rate, which can be quite high. Long-term capital gains tax. If you hold the asset for more than a year, you usually qualify for a lower tax rate. This encourages people to invest longer term, which can help build wealth. Understanding these basics is critical because the strategies to legally pay zero taxes often depend on timing, the type of asset, and your personal tax situation. In the next scenes, I'll show you how to use these rules to your advantage, legally reducing or even eliminating your capital gains. Tax. So, whether you're investing in stocks, real estate, or crypto, knowing what capital gains are and how they're taxed is the foundation for keeping more of your money. Ready to learn how to protect those profits? Let's move on. Now that you understand what capital gains are and how they're taxed, let's dive into the exciting part, how to pay zero taxes on your capital gains. Legally, here are 5 powerful strategies used by savvy investors and experts to minimize or completely eliminate capital gains. Tax. 1. Take advantage of the 0% long-term capital gains tax bracket. In many countries like the US, if your income is below a certain threshold, your long-term capital gains tax rate could be 0%. That means if your total taxable income, including gains, stays below that limit, you pay no tax on the profit from assets held over a year. 2. Use tax-advantaged accounts like Roth IRAs or 401ks. Investing inside accounts like Roth IRAs means your investments grow tax-free. When you withdraw under the rules, you pay no tax on capital gains or earnings. 3. Primary residence exclusion. If you sell your main home, you may exclude up to $250,000 or $500,000 for married couples of capital gains from taxes provided you meet certain ownership and use tests. This is a huge tax break for homeowners. 4. Tax loss harvesting. This strategy involves selling investments at a loss to offset your capital gains. By balancing gains and losses, you can reduce or eliminate taxes owed on profits. 5. 1031 exchange for real estate. If you sell an investment property and reinvest the proceeds into another like-kind property, you can defer paying capital gains taxes indefinitely as long as you follow strict IRS rules. These strategies are all legal and widely used by investors to protect their money, but they require knowledge, timing, and sometimes planning ahead. The Key takeaway: you don't have to lose a big chunk of your profits to taxes. With smart moves and understanding the rules, you can keep more of your money and grow your wealth faster. Let's make all this real with a simple example. Meet Sarah. She bought a house 5 years ago for $300,000. Over time, the property appreciated and she sold it recently for $500,000. That's a $200,000 capital gain. Normally, Sarah would owe capital gains tax on that $200,000, which could be tens of thousands of dollars, depending on her tax bracket, but Sarah used one of the most powerful tax strategies available, the primary residence exclusion, because Sarah lived in the house as her primary residence for at least 2 of the last 5 years before the sale. She qualifies to exclude up to $250,000 of capital gains from her taxes. That means the entire $200,000 gain is completely tax-free. Now let's look at Mark, an investor who bought $10,000 worth of stocks. He held the stocks for over a year, and when he sold them for $15,000, he realized a $5,000 capital gain. Because Mark's total income falls within the 0% long-term capital gains tax bracket, he pays 0 taxes on that profit. Mark also uses tax harvesting. Last year, he sold some losing investments to offset gains, reducing his taxable capital gains even further. These aren't special loopholes or tricks, they're perfectly legal, IRS-approved strategies that anyone can use with proper planning. The bottom line: by understanding the tax rules and applying the right methods, Sarah and Mark both kept all their profits instead of losing a big chunk to taxes. Imagine what you could do with that extra money: reinvest, save, or spend on what matters most. So, whether you own a home, invest in stocks, or hold other assets, knowing these strategies can help you protect your hard-earned wealth and build a stronger financial future. Now that you know the proven, legal ways to pay 0 taxes on your capital gains, here are some final tips to help you take action and protect your wealth. Tip number 1. Plan ahead. Taxes don't just happen at the moment you sell. Start planning your investments with tax strategies in mind from day one. Hold your assets long enough to qualify for long-term gains. Use tax-advantaged accounts where possible. The earlier you plan, the more you save. Tip number 2. Keep good records. Track your purchase dates, costs, and sales carefully. Good record keeping makes it easier to apply the right tax rules and avoid mistakes or audits. Tip number 3. Consult a tax professional. Tax laws can be complex and change often. Work with a qualified tax advisor or accountant who understands capital gains tax strategies. They can tailor the best approach for your unique situation. Tip number 4. Use multiple strategies together. Combining methods like holding investments long-term and using tax loss harvesting can multiply your savings. Tip number 5. Stay informed. Tax rules evolve. Keep learning about new laws and strategies that can help you maximize your wealth. Remember, paying 0 taxes on capital gains is not about avoiding taxes illegally. It's about using the system to your advantage. It's about being smart, informed, and strategic with your money. If you found this video helpful, please like, subscribe, and share it with others who want to keep more of their hard-earned money. Leave a comment below. Which strategy will you try first? Or what questions do you have about paying taxes on investments? Thanks for watching, and here's to keeping more of your profits legally and growing your wealth faster. See you in the next video.